Now, if I short the stock, I have to put up 50% of the cost of the stock to sell the stock I don't own with the expectation that it's going to go down in price. If it goes up in price, I lose money. If it goes down in price, I make money. But instead of shorting the stock, what a lot of traders would rather do is do what? What would the trader rather do?
Buy
put options. So everybody type buy put options. Okay. And yeah, Jasmine and all my advanced traders, you're absolutely right. You can do a bear call spread. You can do a bull put spread. You can, a bear put spread. But in terms of just the basic approach to this, guys, you would buy put options. Okay. So the first thing I have to do is I have to set the trade. So I want everybody to type this into chat. Set trade. S-E-T, set the trade. Everybody type that into chat. Set the trade. What that means is I have to get my stop loss, my entry, and my target. So now that I've found a potential trade, all I have to do is now prep the trade. And so the first thing that I have to get is my entry price. Okay, so once again, the first thing I have to get is my entry price, SBGI. Let's go back to that. Now, your entry price rule when you're shorting a stock, you only want to short this. And guys, buying put options, shorting the stock, same type of process. So if you hear me say shorting the stock, I might just be buying put options. It really kind of is the same thing. So the first thing I have to do is I have to get my entry price. Now, a lot of traders and us here at Taplin, the legacy trading system, what we like to do is we like to short the stock as it's going down. We don't want to short the stock at its current price. We want to short the stock only if it continues to move in the direction. So I only want to get into the trade if I see it continue to go down tomorrow, because I don't want to get into short the stock at the market price and watch that stock go up tomorrow. I only want to get in if it continues to follow through on that breakdown in price. So everybody write 10% of the ATR under the low. So once again, 10% of the ATR under the low of the day. So if the low of the day is, and we'll just write down this in chat, if the low of the day is 28.70, okay, so the low of the day is 28.70, the ATR is 90 cents. What is 10% of 90 cents, everybody? 10% of 90 cents.
9 cents.
9 cents. So 9 cents under the low of 28.70. I'm going to short this stock at 28.69. So everybody write 28.69.
28.61.
Yeah, excuse me. Yes, thank you, Gino. 28.61. 28.61. Okay, so tomorrow, for me to get into this trade, what does it have to do? It has to go to 28.61. That's what it has to do. If it goes up, we don't get into the trade. If it goes sideways, we don't get into the trade. We only get into the trade if it continues to move down.